Now, the thing is about what is a good accounting system. So a good accounting system has a general ledger system. So what a general ledger pretty much is an accumulation of costs. And that is very important, whether you have a commercial or a government contract. So we want to be able to accumulate all the costs associated with your business. And one way we do that is by creating a chart of accounts. So it would be preferable to have this established prior to a contract, but typically we see clients come in after a contract. So Mac, I explained, you get a contract, you do a solicitation. Hopefully the solicitation, when you calculate your rates, was done so correctly as Fred demonstrated. Some people come in with 26% when it's really 82%. Having a good set of books will make sure you calculate the 82%. Okay? But what happens is you get a contract. Then you need to have a good financial system in order to capture those contract costs. Regardless of the type of contract, whether it's a firm fixed price or a cost reimbursable, you really want to capture the costs to ensure that you know as a business that you're making money or you're losing money. Okay? So what we do is in a chart of accounts, they are, in this situation, I'm going to give you 2 indirect rates. And Tom Martin will talk about them further. But you have an indirect rate called overhead and an indirect rate called general and administration. Going forward, I'll call it G&A. Okay? So when you come in and you have a chart of accounts, you need to show the chart of accounts the same way that your proposal is written. So it is really important, and I can't emphasize this enough, prior to giving a proposal to the US government, you should seek guidance. You know, you really need to get this because of 10 years with Tom Martin, the first thing he taught me was consistency with the US government. Everything is consistent. So your cost proposal will match your contract, and your contract will match your financial system. So if you do a proposal with just, for example, 3 different rates, and again, to Mac's point, no one can tell you what your rate structure is. So sometimes when you go into a solicitation, they say, we want overhead fringe, all these different rates. If they're not the way your accounting system is set up, then they don't apply to you. Just because you're in a solicitation doesn't mean you have to provide those rates. Okay, and that's so important. So you do a proposal, and let's assume you propose overhead, G&A, fringe, and material handling for some reason, because that was on the solicitation. You're now stuck with this. That means to be consistent, the proposal is going to be consistent with your contract, which means now your billing system or your financial system must also be consistent with the proposal. Do you understand? Okay. So in this case, so when you do your solicitation, let's assume you did the two indirect rates, overhead and G&A. First things we do is we need our direct costs. And as the name implies, it is all of the direct costs associated with that project. Whether the project is firm fixed price or CPFF, that's cost plus fixed fee, you still need to have all the direct costs in the cost of goods sold section. That is relatively easy for people to understand because this is a direct cost. The difficult part becomes when you determine what is the indirect costs. Now, in this case, you had overhead and you'd have G&A. So you would have to create in your chart of accounts in 2 indirect pools. Okay, and that's what we call the pools, is where all of the costs are accumulated. So all of the overhead costs we say are in the overhead pool. All of the G&A costs are in the G&A pool, and all of the unallowable costs, which is so important, the unallowed costs are in the unallowed portion of your P&L. Okay? Now, an example of an unallowed cost would be interest, would be alcohol, charity, stuff like that there are explicitly unallowed by the US government. Okay, so what you would do, so in a chart of accounts, you would have, the best way to do it is to create a sequence that is easily identifiable. So in my case, when I set up a client, all the 5, so 5,000 would be direct costs, okay, 6,000 are overhead, and 7,000 are G&A, and 9,000 are unallowed, okay, so that's how we begin with creating the chart of accounts to ensure that we are capturing all of the expenses required when we work on a contract.